Good morning or good afternoon, everybody, where you are in the country. Looks like we have a pretty good crowd. So I am very pleased to be doing this webinar. I um, I know that this, so let me say this first. I know myself, so I have to give a warning, I guess. I know that this is being translated simultaneously. So I'm going to make sure, well, I shouldn't say I'm going to make sure. I'm going to do my best to speak a little bit more slowly than I'm used to. But I know as well, myself, I know as well that I will at some point pick up the pace because that's just who I am. I suppose I get excited by all this. So apologies in advance to the person who's translating this presentation, and apologies as well for those that are watching this over on the French channel. Let me get started right away. What I want to do today is three things. First of all, look at the results of our 2015 Farmland Value Report. Second, talk about some of the drivers behind farmland values. I'm going to be talking about crop receipts, prices of grains and oilseeds, interest rates. And three, give a bit of an outlook thinking about this year, 2016, as well as 2017, perhaps. Let's just get started then. So the results of our 2015 FCC report. So this is the picture at the national level. And what you're seeing is a cross section of the different results. You're going to see in the upper left corner the national average, which is 10.1%. I have to say that for us to compute this average, what we're doing is not necessarily computing a simple average of the 10 provinces, but weigh each of the province by their share of farmland in the country. So, for example, provinces in the prairies, especially Saskatchewan and Alberta, will have a much bigger weight in the overall average than provinces in central Canada and eastern Canada. So it's a little bit more complicated than just computing a simple average. So it's just a weighted average and weighted by the share of farmland in each of the provinces. So 10.1% the national average. If you're looking at from top, so the provinces that recorded the largest increases, you have at the top Manitoba, followed by Alberta. Indeed, those are the two provinces that recorded an average increase above the national average. Saskatchewan is not far behind at 9.4%. Quebec is squeezed in between the national average of 10.1 and where Saskatchewan is, Quebec being at 9.6. On the West Coast, 6.5% for BC. And you also have the results in Ontario and as well as in Atlantic Canada. I think it is really important at this stage to talk about one of the main features behind the results and not to look at, for example, if you take Saskatchewan at 9.4%, it is absolutely important to understand that this does not mean that farmland values have been increasing everywhere. Indeed, if you look at Saskatchewan, or I should perhaps explain just really briefly again how we compute these measures for farmland value increases, what we basically do is to look at a few, or not a few, more than a few actually, some benchmarks across different provinces. The provinces that have a higher share of farmland will have more benchmarks, obviously, and so we appraise farmland around these benchmarks, and we update the value of these benchmarks to end up with a provincial average. But looking at that 9.4% in Saskatchewan, for example, it is important to understand that farmland values in Saskatchewan are not everywhere increasing. Indeed, in Saskatchewan, nearly half of the benchmarks in the province are showing no increase in 2015 or a very little increase, so in the neighborhood of 1, 2, 3%. So you have half of the benchmarks that are showing very little increase or even no increase, and in a very few cases, a small decrease. Ontario is in a similar situation. Nearly 40% of the benchmarks recorded no increase or very little increase. So to look at the provincial average or even at the national level and say that farmland values are increasing everywhere is not accurate at all. You have to be looking at the different regions, and so producers in particular need to be careful about making or drawing some conclusions about what is happening in their own part and their own location. Let's instead move now, take a step back and look at the national results over a period of time. So you have the last 20 years in this chart. And as you can see, farmland values have increased basically in the last 20 years. We have not seen a decrease in the national level in farmland values. The last time that farmland values actually recorded a decrease, it was a very small one in the neighborhood of 2%. It was in 1992. So for almost 25 years now, we've seen farmland values climb, but the climb has been a little bit, well, a lot more significant in the years 2011, 12, 13 than what we've seen in prior years. One thing I want to point out is that with the second consecutive year now that we have a rate of increase that is lower than the previous year, right? So 2015 at 10.1 is lower than the increase in 2014, and itself was lower than the increase in 2013. Moving on now, so this is the evolution, so to speak, of farmland values at the national level. But if I do this a similar exercise, focusing on the last 5 years instead of looking at the last 20 years, simply because it's just a lot easier to illustrate this on a picture. So if I'm just looking at the last 5 years, and focus on central Canada and part of the prairies, you can see, especially looking at Quebec and Ontario, you can see that actually looking at the top increase that we've seen over the last 5 years actually occurred in 2012. So it's 3 successive years now that we've seen the rate of increase in farmland slowing down, right? So farmland, just to be clear, farmland values continue to increase, but at a slower rate. Manitoba is in somewhat of a similar situation, although the changes in Manitoba are actually blocked in a couple of years, and so strong increases for 2 years followed by lower increases. Still, though, in 2015, Manitoba being the province that, on average, recorded the largest and most significant increase in farmland value. So moving on to west of central Canada, looking at Saskatchewan, Alberta, and BC, certainly for Saskatchewan, you still have that landing, right? That what I call that soft landing, slower appreciation of farmland values for the last 2 years in this case. Saskatchewan showing really strong increases in the years leading up to 2013, 2011, 2012, and now we're seeing slower increases in farmland values in Saskatchewan. Alberta is pretty consistent, showing actually a slightly higher rate of increase in 2015 than what we had in 2014. That's perhaps a little bit surprising, given that a lot of people, including myself, would have thought that with the downturn in the energy sector, that could have created a wealth effect or a negative wealth effect and slowed down the demand for farmland. We'll get back to that when we talk about the drivers behind farmland values. And in BC, we're showing a higher rate of increase, but I think it's a little bit misleading in this case to show, first of all, we're talking about a higher base value for British Columbia. So we're working with, and there's a little typo there with the word Columbia, I apologize for this, but we're working off a higher base in terms of farmland values in British Columbia. And if you go back more than 5 years, if you go back 10 years, so going back 10 years all the way to 2013, you would have seen that farmland values in British Columbia were relatively stable because it started at a very high level to begin with. But I actually find it interesting to see that 2015 is showing a significantly higher rate of increase than in previous years, certainly 2011 and 2012, and that coincides with strong crop receipts in British Columbia, which really has a diverse mix of crops, and especially the Canadian dollar has had a significant impact when it comes to crop receipts in British Columbia in 2015. We'll get back to that later. And finally, moving all the way back east of the country, if you look at Atlantic provinces, I would say that this is a bit more random, or appears a bit more. I don't think there's anything random about all of this, but it does appear a little bit more going in so many different directions in Atlantic provinces, and I would say that this is certainly because of the mix of crops, a lot more diverse as you go east in the country. And because of that, some of the drivers that you would see for grains and oilseeds perhaps are different for small fruits and vegetables and potatoes. And so um, a lot more diverse picture for provinces in Atlantic, but overall, perhaps with the exception of Newfoundland and Labrador, overall you see the rate of increase in Atlantic provinces being lower in 2015 than what it was in 2014. So that's the picture at the national as well as provincial level. So let's move on now to talk about some of the drivers behind farmland values. I'm going to be talking about two specific drivers that I think are the two most important drivers, and then I'll mention as well some of the drivers that I think have more of an impact or more of a local impact. But the two drivers that I believe have more of a national impact are interest rates and crop receipts. So let's start with interest rates, which I think I would rank second actually, even though I'm starting with interest rates. If you look at economic growth in Canada, 2015 has been sluggish. If you look at the last quarter of economic growth in 2015 and compare that to the last quarter, Q4 of 2014, you're just looking at a 0.5% growth in Canadian GDP, gross domestic product. So no doubt the economy has been not going through a recession, but nevertheless it's been growing at below average rate, with the result that the overnight rate of the Bank of Canada was cut twice in 2015. First in January of 2015, and again, once again, another 25 basis point, a cut of 0.25%. In July of 2015. So what's the impact of all that? Well, I like now to point out this particular statistic or indicator, which is the effective business interest rate. That's computed by the Bank of Canada. And what this is a weighted average. It's an average of all the different lending or loan products available in the marketplace. So think term loans with different terms. Think fixed rate versus variable rate. So aggregate all of this, as the Bank of Canada does, that gives you what we call the effective business interest rate. So that gives you an idea of where borrowing conditions are going or how did they evolve in the past. And what I'm trying to point out with the red arrows here is that once there was the first cut in the rate of the overnight rate of the Bank of Canada, you've seen borrowing costs declined significantly. Although the decline of the cut in the overnight rate was about 25 basis points, and that just was followed by a cut of prime rate by 15 basis points. See that the overall borrowing costs, if you think a 5-year mortgage fixed rate, overall borrowing costs came down quite a bit, almost 50 basis points. And so that actually was a big shock in the marketplace, was somewhat unexpected by the market. And that brought borrowing costs down. And so when interest rates go down, or borrowing costs in this case come down, that is actually increasing the demand for farmland. It leads to higher prices, potentially. A second cut was done in July, and so that's the arrow on the right-hand side of the chart. And that did bring borrowing costs down again, but not to the extent that we saw at the beginning of the year, right? So overall, borrowing costs stayed low. Decreased and stayed low for certainly the first 6 months of the year. But what I find interesting as well, which I think is absolutely critical if we're to think about where farmland values are likely to go in 2016 and beyond, you see borrowing costs actually starting to climb in for the second half of 2015. So what I want to emphasize with this is that yes, and then indeed the Bank of Canada just made an announcement yesterday that they were going to keep the overnight rate where it is. Certainly not going to see an increase in the overnight rate of the Bank of Canada anytime soon. But what I want to illustrate here is that focusing on the Bank of Canada is one thing, but it's not the end of the story. There's more to it, right? There is more movement in terms of interest rates faced by operations and their borrowing costs. And so that's definitely something to monitor. I'll say more about that when I talk about the outlook for 2016 and 17. But I think overall borrowing costs are remaining low, but certainly, like I said, focusing on the Bank of Canada is not the end of the story. Another big driver are crop receipts. And if we think of receipts, farm cash receipts, I'll focus on crops and this, or grains and oil seeds for to be more precise. But when we think of receipts, we have to focus on two things: prices and production. So from a pricing standpoint, this is the price of corn, wheat, soybeans in US dollars on a per bushel basis. And yes, certainly in the case of soybeans, there's been a declining trend in 2015 for soybean prices expressed in US dollars. I think we can see as well a declining trend when it comes to wheat. We see roughly, well, I see roughly a flat pattern when it comes to corn prices in the US dollars when you look at the 2015 trend. So those are prices in US dollars, but obviously you have to convert it back to Canadian dollars, accounting for many different things, among which the exchange rate, but also basis levels here in Canada. So if I convert these US prices into prices that Canadian producers received in 2015 on average, that's going to be the next chart. So I don't know that if I can do this well through a webinar, but I'm going to try to move back and forth between this one, which is in US dollar, and this one, which is in Canadian dollar. So again, back in the US, forward in Canadian dollar. Back in the US, forward in Canadian dollars. And hopefully, this is a picture in Canadian dollars, and hopefully while you were able to see the sort of the jump in grains and oilseed prices, certainly for corn, wheat, and soybeans, when expressed in Canadian dollars in the Canadian market. So the bottom line here is that the Canadian dollar did have a significant impact on crop receipts because it did protect or buffer, I would say, Canadian prices from the general decline that we've seen in the U.S. market. There's sort of I would call this a reset in grains and oilseeds. So not necessarily a huge decline coming up, but certainly some sort of reset. We reached the top of the cycle, and now we're cycling towards we're going towards the bottom of the cycle. But we're probably going to establish a bottom that will be higher than the average observed between, let's say, 2000 and 2005. And here I'm going all the way back to 2010. So good prices overall, despite the decline in commodity prices overall. I think Canadian prices have actually stayed relatively high, and that was the result of a low Canadian dollar. A Canadian dollar that lost about 17% of its value in 2015 compared to 2014. Production-wise, I'm going to bring your attention to the last two rows or lines in this chart, of this table. That the next to last one compares 2015 production to 2014. And the very last line compares 2015 production to the average of the previous 5 years, 2010 to 2014. And as you can see, 15 production has been actually very strong. Yes, we do witness a decline in wheat, whether you compare it to the previous year or you compare it to the 5-year average. But everything else going up actually offset the decline in production that we've seen for wheat. So overall, good volume, some quality issues in 2015, depending on where you are in the country. I'm certainly thinking about Alberta, for example. But overall, decent quality, good production overall at the national level, which actually, again, sort of sustain or support receipts at the aggregate level. So crop receipts, interest rates, I would say by far the two biggest drivers when it comes to farmland. There are other factors as well. Now, if you think of dairy producers, now it's not unusual to see dairy producers try to expand their land base, try to diversify away from dairy production. 2015 actually was not that great of a year for dairy producers. If you look at the milk price, it through summer especially went through a big downturn because of the challenges in the dairy industry, the increase in the demand for butterfat, but the resulting excess supply of solids non-fat, which has brought the pool price that producers get. But notwithstanding that particular slowdown we've seen in some parts of the country, dairy producers trying to expand their land base. Some of the areas, I was talking about Saskatchewan early on when I was saying that nearly half of the benchmarks did not record a significant increase in farmland values, despite the average of 9.6% or 9.4% that we're reporting for Saskatchewan. And indeed, the benchmarks that recorded the largest increases are located in regions where you see a strong concentration of pulse production. Because pulses, if you think lentils, peas, and so on, because they've had a pretty good year in 2016, looks as if it's going to be an amazing year still. That raised crop receipts in those parts of the province and led to higher farmland values. Cattle producers as well had a pretty good year in 2015, so you saw some cattle producers trying to expand their land base. So then you have, aside from crop receipts and interest rates, then you have to think about where am I located? What are the industries that are, in my neighborhood, my region, my community? And how are these sectors evolving over how did they evolve over the last couple of years, and what's the outlook for the next couple of years? That has an impact on the overall demand for farmland, just not focusing on grains and oilseeds, but also on these other sectors. Same thing for if you're thinking about other crops like fruits and vegetables. Pretty good year in 2015, mostly because of the low Canadian dollar. So I'm trying to give a hint, I guess, in some sense, when I'm going to be talking about the outlook in just a second. A lot of that outlook is actually going to be dependent on your outlook for the Canadian dollar. All right, so that's where we are actually. A bit of a disclaimer before we go through this outlook. That's what I'm trying to do here is actually get my shiniest crystal ball out and share with you some of the observations that we've seen at FCC. So really, it's not about making projections with a really hard number that you can take away and bank it, but really it's more about sharing what we're seeing in terms of trends and where we're seeing the market evolve to. So keep that in mind. We're not about making projections on a dollar basis, but really talking about some of the trends and discuss where these things are going. So I'm going to focus on crop receipts first. And so this is a picture of two provinces that I think are facing a bit of a different outlook. And I chose these two provinces on purpose because everything else sort of falls between Ontario and Saskatchewan. So if you look at 2015, which technically it's still a forecast because we don't have yet the final numbers for the last 3 months of 2015 yet, we're pretty confident of that forecast because, like I said, we have the first 9 months. We know what prices look like, although we don't have official receipts yet. We know what prices look like in 2015 for the last 3 months, so we're pretty confident in that forecast. 2016 is a pure forecast because we have to make assumptions about yields for the 2016 crop. So basically, you're making an assumption that we're going to have average yield that are adjusted up because of the upward trend in yield over a long period of time. So we're putting aside any weather issues that we could be faced with or facing in 2016. We have to make assumption about commodity prices. Usually what you're going to do is you're going to use futures markets to tell you a little bit about what the market anticipates future or prices of the main commodities to look like. We have to make assumptions about the Canadian dollar. So with regards to the Canadian dollar, the assumption is that it's going to remain at 77 cents. That's a big if, and I'll get back to that. With regards to prices, these forecasts were computed before planting intentions in the United States were released a couple of weeks back. And as you followed the news, you know that intentions, especially when you look at corn, went up quite a bit in terms of acres that are intended that producers intend to plant in 2016 compared to 2015. So intentions for corn acres are up quite a bit. We're up 6%, and that brought down corn prices quite a bit a couple of weeks back. So that forecast, or these forecasts that you're seeing up here, are actually prior to some of the insights we got from the USDA report. Nevertheless, I don't expect that if I'm updating these forecasts that it would find very different numbers what I'm seeing here. I think the Canadian dollar has more of an impact on the overall numbers that you're seeing. And what are these numbers? Well, overall at national level, we're looking at crop receipts being flat, basically. So that's, for 2016, we're looking at basically no changes in crop receipts for 2016. If you look at different provinces, because of having a different mix of crops, you look at Ontario, especially with corn prices probably trending down in 2016, you're seeing more of a decline in 16 compared to 15 than, say, Saskatchewan showing up actually an increase over 2015, especially because the outlook for canola is actually positive, while the outlook for wheat's not that positive. Again, potentially because of what was revealed a couple of weeks ago when it comes to wheat acres coming down in the U.S. I believe that this is actually could trigger a little bit more acres moving into wheat in Saskatchewan, and false crops are going to be strong in 2016. So overall, you have a pretty good outlook for crop receipts, despite the slight decline that you're seeing in Ontario, 2.7%. I would call this sustaining crop receipts we've seen over the last few years. And I think that's the key for everybody asking me, what about 2017? Well, that's down the road, but I would say if we're able to sustain receipts, maybe not at the top. And so, like I said, 2015 was a record year. We're expecting 2016 to be just slightly below 2015. So as long as we're able to sustain that level, even slightly below that, so even if we're seeing some sort of reset and some sort of top of the cycle that's now moving downward, as long as we're sustaining that high level of receipts, I think we can certainly sustain the farmland values we have currently in the marketplace. And that's the number one thing to keep in mind and to focus on. The Canadian dollar is absolutely critical. So throughout 2016, what we're going to do is we're going to monitor the Canadian dollar quite a bit. So if you've looked at the markets right now, and if you looked at the markets over the last couple of weeks, you've seen a definite trend up for the Canadian dollar. I've looked early this morning. It was just below 78 cents, went just slightly above 78 yesterday for a while. 78 is a key resistance level. Right? So if you look at the charts of the Canadian dollar, and every time lately we approached 78 or went to 78, the market was not able to take the Canadian dollar above 78. But once it breaks 78, if it does break 78, I would not be surprised to see the Canadian dollar move up to 80 and even exceed 81. I think on average in 2016, we expect the Canadian dollar to end the year below 80 cents, above 75, below 80 cents. Hence the reason why we have the assumption of a Canadian dollar around 77 cents when we compute projections for receipts. But as I said, really matters if we are breaking that 78 cent resistance level, and that's exactly where we are as we speak. If we do break it for a number of days, even week, I would not be then surprised that this trend up in the Canadian dollar continues, perhaps exceeding the 80-cent barrier. But it seems to me that the United States is not going to raise interest rates anytime soon. There's still a probability of seeing the Bank of Canada support the economy that we have now. If you look at employment numbers in Canada, which is a key indicator of the health of the Canadian economy, I would say that we're pretty much where we expect it to be. So we had some good, it doesn't really look good if you look at it. So the headline is a bit misleading. What I mean by positive employment numbers, I mean that the March employment numbers or unemployment rates that you're seeing up on the screen, that 2016 red bar, that's the March numbers. They were actually better than the month before. So it's going to take more than 1 month to actually convincingly make the case that we're past all those issues that got triggered by the downturn in the energy sector. And I don't think we're there yet. I think we're likely to see things get a little bit worse before it gets better. But we're really approaching that time where we can definitely say that, hey, the outlook for the Canadian economy is actually picking up. So then it doesn't appear that the Bank of Canada would cut the overnight rate. But if it does, then that could bring borrowing costs down, and that could also prevent the Canadian dollar to move up again. It all depends on the health of the Canadian economy with respect to the U.S. economy. Oil is also another driver. I still think that for 2016, there's plenty of oil in the marketplace. Most of the indicators that are available actually suggest that the supply continues to exceed demand. That's going to take some time before we see any type of rebound in oil market that will bring prices higher than where they are now, when they are now. So that's for receipts. Do expect 2016 to be a good year. When it comes to interest rates, lower for longer, well, maybe not. I'm not so sure about the lower part. As I said, it's one thing to focus on the Bank of Canada rate, but I think it's a mistake to only focus on the Bank of Canada. So that's what I tried to explain at the very top of the presentation. That's what I'm trying to focus again here. I think it's absolutely critical for agricultural operations to monitor what is going on in the broader economy, not necessarily just in your own sector of production, and also have a chat with your financial advisor, with your accountant. Really look at different scenarios, because it's a bit misleading to simply just focus on the Bank of Canada rate. As you saw early on in the presentation, when you're looking at borrowing costs, this last 6 months of 2015, despite the Bank of Canada not doing anything, borrowing costs went up. A question could very well be why is this the case then? If the Bank of Canada does not move interest rates, well, because of more risks in the economy. If there's more risks in the economy, more losses because of the slowdown that we're witnessing, especially in Western Canada. More losses, more risk mean higher interest rates from financial institutions. So that's something to keep in mind in 2016, perhaps towards the end of 2016, as we're seeing the Canadian economy pick up again a little bit of speed. Perhaps that's where we could see borrowing costs move up without seeing a move by the Bank of Canada. So overall, I think in conclusion, I'm actually very optimistic with respect to the outlook for agriculture in general, especially for crops and farmland. If you look at crop receipts, we're projecting that crop receipts are going to be very strong. Perhaps not a record year like we've witnessed in 2015, but still a very strong year in 2016. Net cash income, because that's one thing to focus on the revenue side of things, but if you also bring in expenses are actually projected to go up by around 2%, 2 to 3%. A lot of it is going to depend as well on the Canadian dollar, right? The lower Canadian dollar actually raises expenses a little bit. So net cash income is expected to decline in 2016 if you look at the projections made by Agriculture and Agri-Food Canada, but overall stay above the long-term average of the last 10 to 15 years. So overall, a very optimistic scenario, but I'd also caution not to base your decisions on recent data points or recent observations about the farmland market. There's a definite softening or a definite landing of the farmland market, and I would expect that the long-term trend to be in this towards moving up towards smaller increases, though like the ones that we've seen, for example, focusing on the 1995 to 2005 period, more in line with overall inflation in the economy and more in line with the long-term productivity trend for farmland, which is in the neighborhood of 2% on an annual basis. So I'll leave it at that, and I will just turn it over to you, Chris, so that you can monitor or moderate the question period.
Thanks, JP. As always, some interesting stuff, well presented. Thank you very much. I particularly like the pay attention to what's going on around you. Cautionary tale, pay attention to other industries, what they're doing, and because I find what we find here at Farm Management Canada is people definitely come to us, but they have very siloed thoughts. So it's I think that's very good advice to kind of open up and look outside. Rightio. Well, I'm happy to say that we have broken records here today. I think we have one of the highest attendance, so you are a much sought after commodity yourself, Mr. Gervais. And I'll get straight into it with a question from Fred. Do you think we need a rethinking of government policy and or tax law changes to facilitate the transition of high farmland values?
Well, that's an interesting question, because we're just at the point. I believe the government is at the point of launching new consultations with regards to that next generation of government programs, and so we're transitioning from growing forward 1 to 2 to potentially another era of government policy when it comes to agriculture. And I would certainly encourage governments to and all stakeholders to be thinking about succession. Actually, it's not just a government responsibility. I would say first and foremost, it falls on the lap of producers to actually make sure that they have a succession plan. Now, the question is more about how to facilitate that, implying, I suppose, that it's a little bit more difficult to transfer farm assets than it has been in the past, which is perhaps accurate. I always say that agriculture has always been a very intensive, capital intensive sector. And for sure, it's not different nowadays than it was in the past. Maybe a little bit more difficult now, given the strong increases in farmland values that we've seen. First and foremost, have a succession plan, work with your network of partners to establish that plan, and perhaps, given what we've seen in increases in farmland values over the last few years, perhaps we're going to have programs that are maybe account for the specific feature of the sector now.
Or all crops?
Sorry, I missed that. I just got that last part of your question, Chris.
He's asking if the crop receipts you're referring to, the forecast slips, are they for grain and oilseeds or all crops?
All crops. All crops. I did focus a lot more in my presentations on grains and oilseeds in a lot of cases. I'm not going to quote a percentage because that's going to be a lot different, for example, in Saskatchewan versus Ontario. But a lot of those crop receipts are driven, a significant share, bigger shares driven by grains and oilseeds, but they do account for all crops. And as I said, if you're even thinking about fruits and vegetables, for example, a lot of the drivers in terms of profitability are the same as they are for grains and oilseeds. I would add perhaps weather conditions in the U.S. when it comes to fruits and vegetables. Thinking about the drought, the successive years of drought in California, but the low Canadian dollar does have a big impact on crop receipts, and that's across.
Thank you. I'm going to say Jean, it might be Jean. She or he actually shares a question that I always have for you, I think. How do you see the TPP in all of this?
Well, TPP is potentially down the road a significant driver of farm income in Canada because it would open up foreign markets to grains and oilseeds, red meat. It would potentially increase competition here in Canada for some supply managed sectors. So overall, down the road, and who knows, is it that we're talking about 5 years, or we're talking about even more? Potentially a significant driver of farm income. But having said that, to me, this is so far down the road that, yes, of course, we're going to monitor TPP. Of course, we're going to monitor the debate in Canada with regards to TPP. We're not only going to monitor the debate in Canada, but also going to monitor the debate in the U.S., for example, where it's far from obvious, in my opinion, that TPP is a successful path to ratification in U.S. Congress right now, given the U.S. politics. But having said that, even for, if you think of dairy, for example, which is often mentioned as potentially being pressured because of TPP, I would argue that we have much more significant issues in dairy right now than potential trade deals. If you look at, and I did allude to that a little bit in my presentation, when you look at profitability being pressured in currently right now, that's not a result of trade agreements. That's really a result of the excess supply of solids non-fast imports of proteins coming from the United States. So it's not as a response to future trade deals. So yes, we're going to continue to monitor that, but even for export competing sectors as well, I think there are far more pressing issues short term within the next 2-3 years that are going to have a bigger impact on farm income than those trade deals.
Thanks, JP. Parashar has a question about foreign investment. Is there an information on farmland purchased by offshore investors, especially China, and if that has an impact on values?
Very little, first of all, very little data, very little information on foreign ownership farmland. I'm aware of a study that was done at University of Guelph that looked at ownership of farmland, domestic versus foreign, and also different types of ownership within Canada. So we're talking about, is it a retired producer that owns the land and leases it back? Is it somebody that it's outside of agriculture and so on? So if I rely on the results of that study, which basically was looking at a specific part of Ontario, farming ownership is still a very marginal event or occurrence in Canada. I'm not denying that there is more and more interest in farmland by what I would call non-traditional owners of farmland. So you're talking about people that have not been traditionally attached to agriculture, either producing or living in rural communities. So I'm not denying that this is a trend for sure. But in terms of an impact, I think at this time, what we're seeing is still that by far the vast majority of transactions still occurring between producers. So somebody that decides to scale back is selling, somebody that decides to transfer, and so on. So by far, the drivers are producers to producers. And like I said, there is more attention and a bigger interest in farmland for sure. But I would say that it's still mostly driven by producers. And unfortunately, we don't have yet data on foreign versus domestic ownership at a broader scale at a national level.
Thanks, JP. The next question comes from our good friend Jörg. He asks, on a provincial basis, where do you see local differences in prices? Any trend there?
Well, I would say something. So I did say at the very top of the presentation that not all benchmarks, so not all farmland is increasing, I suppose, right? Because in Saskatchewan, for example, I did say nearly half of the benchmarks that we use in computing the average increase in Saskatchewan actually showed no increase or very little increase. And so is there something, these benchmarks that are showing no increase or very little increase, is there something that they have in common? Is this something that they share? And I would say one of the things that they share is that we've seen these benchmarks actually increase quite a bit in previous years. And so for that farmland that has increased quite a bit in previous years, definitely seeing 2015 as being no increase or very little increase after all. But for that land that had not shown any type of significant increase in the previous years, that is the farmland that has shown the bigger increase in 2015. So there's a bit of a catch up. You can argue this at the provincial level, comparing, for example, why is Manitoba increasing at a faster pace than Ontario? Well, you're working off a lower base. Manitoba had not shown increases as fast as Ontario did in the previous years, and so on. So there's a bit of catch up that you see across provinces. And you see within a province as well. I would say that I think that would be the main observation that would be common across some of the benchmarks that are showing no increase or very little increase. Is that you've seen these benchmarks increase quite a bit in previous years, and now we're seeing little activity in terms of farmland values.
I just want to say to Bert, I think you just answered his question right at the end about Manitoba. So, Bert, I'm not ignoring your question. I believe JP did answer it. Over to Dick, who asks, any thought on the price elasticity of farmland and how much non-farming buyers affect price? Oh.
That's that's somebody that has to have an economics background to use the word elasticity in the question. So I'm actually happy to get that question. So no, we don't have an elasticity per se. I mean, of course we know that. I've been talking about quite a bit about the demand for farmland, right? When explaining the price trends that we're reporting today. There's also another part of the equation, and that's the supply. And we know that supply of land, so land that is available, has been very tight in recent years. And so if, for example, we were to see in future years still income not falling, interest rates remaining low, that would sustain strong demand for farmland. But if we were seeing, for whatever reason, if we were seeing more land coming in the marketplace, that could actually put a little bit of pressure on farmland prices. And so that's one of the things that is really hard, and hence the reason perhaps why I did not address it really carefully is because it's really hard to get data. So we know that on average, land's going to turn, 2 or 3% of land is going to turn on an annual basis, but it's more anecdotal than based on solid numbers. And we know as well that in recent years, we've seen that number of land that is in the marketplace, that turns in the marketplace, being in the low end of what we've seen, let's say, going back 10, 15, 20 years. So that's another thing that we're going to try to keep an eye on throughout the year. But as I said, it's really hard because you don't have a whole lot of data to be able to infer that number. So in terms of an elasticity, I think those are the things that are really make it complicated to compute this, because it's not just demand that is moving, demand for farmland. It's also the supply that can have an impact in the marketplace. And I'm actually, interest rates is, I could talk about interest rates and the impact of interest rates on the amount of available farmland. As long as interest rates stay low, I think that supply of available farmland in the marketplace will remain tight, because then, even if a producer, some producers may have the incentive to keep their land base, because they know that if they sell, if you look at they take their capital, then they're going to have a pretty low rate of return on that capital. So there are a number of different things that make it really hard to compute one number in terms of an elasticity, for example.
I'm glad you knew what elasticity meant. We're moving over to Earl. He asked, U.S. government support is at record levels for subsidies. Will Canada need to follow?
Well, it's not my decision to make. I'm just not so sure. I mean, if you look at, I would say that U.S. government support has changed over the last few years. I think that's one of the key things, is that it used to be about commodity programs, direct payments. You can also go back to marketing loans and so on. Now, clearly, U.S. programs are structured around crop insurance and subsidizing premiums for crop insurance. And so that's by far the most significant expense now of U.S. programs, especially when it comes to grains and oilseeds. And you can even actually bring in margin insurance or income insurance for dairy producers and livestock producers. But when it comes to crop insurance, that's by far the biggest expense of U.S. government programs. And so that would be something to keep an eye on. Farmland values in the United States have actually declined in the Midwest, in some states as much as 6%. But overall, farmland values in the U.S. are pretty flat. They went up 0.7%, I think, in 2015 on average. That's at a national level. We did see a bit of decline in the U.S. Midwest. Not a surprise, because crop receipts, told you in Canada, crop receipts, top of the cycle, a record year in 2015, whereas in the United States, a decline of 9% in crop receipts. And that the difference between Canada and the U.S., Canadian dollar. So hence, the reason why we have to keep an eye on the Canadian dollar.
Sorry, JP. Thanks for the answer. Just another. I'm not ignoring you a bit. There was a question translated from Francais about the land cost in the U.S. So just so you don't think I'm not getting every question, you did answer that one. Over to Cameron, who says, thanks for the great presentation. And his question is, please tell me, does oil prices affect the value of farmland?
Well, that's one of the things that I alluded to, and I'm glad to have the chance to say a little bit more about oil prices, because we were expecting, if you look at our forecast last year for 2015, so go back 12 months ago and look at our forecast for this year in Alberta, we did expect a less significant increase in farmland values than what we're witnessing. So does this mean that the oil market does not have any impact on farmland values, especially in provinces where oil production is concentrated? I don't think that's the case. I think oil still has an impact. It's just that if you look at the numbers for crop receipts and some of the drivers behind the pulse market, for example, they basically offset any type of impact that you could see at the provincial level in Alberta. We did see in some regions that rely a little bit more on oil revenues than others in Alberta and Saskatchewan. We did see land values remaining flat. So I would say that there is an impact. It's just that it's sort of hidden behind other drivers that I think offset any of the impact that the slowdown in the oil market has had.
Thanks, JP. This is something I believe you addressed, but maybe you would want to go back into. How can we explain the difference between the economic value of land versus the market price?
I didn't see much about this. I remember last year we did spend quite a bit of time in this webinar talking about this. So that's actually a very good question because one of the things I don't know what fair value is. Nobody knows, right? The fair value is what the market will bear. But what we can use as a tool to sort of be thinking about fair valuation and the fairness of farmland valuation is to look at the price of farmland. So take, a price, the average price in your province available from Statistics Canada. You just Google farmland values, or not even sure it's called values actually. I think it's farmland prices. Statistics Canada, and you're going to get access to a table that gives you the average in your own province. So if you take that average in your own province, apply the percentage change for 2015 that we just reported, that gives you a price for 2015. Compare that to crop receipts, right? Because that gives you an idea. You could use net cash income because that's, I think, a better measure of profitability. But we know, in our case, we know from our modeling efforts or our investigation that farmland values are more correlated with the income side of things than net cash income. So this is why I keep talking about crop receipts, but you could make the same argument using a measure of profitability that captures as well the side of expenses, right? So going back to what I was saying, take the price, take crop receipts. So that's your ratio of what the land is priced at compared to what you can get out of that land, right? Out of that asset. Indeed, if you look at everywhere in finance, look at financial markets, that's always what they use to be thinking about a valuation of an asset. They look at the price and they look at where the income is coming off of the asset. Think of the stock market, for example. Price to income is what you use to measure whether or not the stock market is evolving in the right direction. So if we do the exercise for farmland, we know a few things. We know that in the prairies, despite the very strong increases that we've seen for a number of years now, 3, 4 years, 5 years, despite the strong increases we've seen in the prairies, the ratio of price to crop receipts is actually in line with what the average ratio has been for the last 40 to 50 years. That gives me a bit of comfort knowing that, yes, farmland values have increased quite a bit over the last few years, but income has increased quite a bit as well. So the key moving forward, and hence the reason why I keep emphasizing that when you think of farmland values, the most critical thing, the most critical issue is being able to sustain income that we've seen over the last couple of years. Now, so that's for the prairies. The ratio is a little bit on average higher than the 50-year average, but that is absolutely to be expected in an environment where interest rates are where they are, right? So if you move towards central Canada and east, this is where you see the ratio being higher than what the average has been. In Ontario, for example, the ratio has been higher now for a number of years. I think, if I recall, 3, 4, 5 years even, than what the average has been for the last 40 to 50 years. So that perhaps is cause for pause in saying that, well, maybe we've seen the plateau of farmland values in Ontario. Indeed, we're seeing the increase slowing down. We're seeing that the farmland that is still increasing in value is where farmland has been roughly stable over the last couple of years. Where we've seen really large increases in 2012 and 2013 in Ontario, we're seeing land remaining flat in that part of the province. So we're really, I think, plateauing in terms of the ratio. And I think that's one of the things to monitor, and hence my comments as well, not to be thinking that farmland values are everywhere increasing. We still have some very good prospect for when it comes to income, and that's really critical to maintain that. But if you really want to take a look at valuation of land and assessing whether it's fair from an economic standpoint, that would be one of the tools that I suggest using, is to look at the pricing versus the revenue side of things.
Thanks, JP. Kira has asked, what are the impacts of GHG's emission reduction pressure on farmland and farming?
Well, on farmland, on farming is a different question than on farmland, although at one point you would expect the two to be connected. But I think those are long-term questions, which I am not sure I have a very strong opinion about. I do expect some pressures down the road for sure. Would these pressures show up in the short term? Not necessarily convinced. I think there's still some factors to work out, some unknowns there that I believe will potentially have an impact. And given that the state of where we at, we don't really right now have a good sense of what will be the impact down the road. I do expect some impact, but I'm not convinced that the impact are going to be really large. But we'll have to wait and see a little bit because I think it's going to be something to monitor for the future.
All right, JP, you're done getting grilled, and maybe you can take away for a nap after this. But most certainly, use 10, 20 seconds to just give us some sort of Dr. Phil final words of wisdom. Go for it.
Dr. Phil, well, the wisdom, that I would have to share, though, is simply to go back to our website. We do have a blog that is updated on a weekly basis. We have the Farmland Value Report itself that you can download from the FCC website that gives you a bit more insights as to what is actually occurring in your own province. So I would encourage you to go see our see our Farmland Value Report. Go to our blog, and you can leave questions there and comments during our blog that are usually answered within a reasonable amount of time. So I encourage you to get the dialogue going in social media and on our website.